What if the biggest difference between people who struggle with money and people who don't isn't income, luck, or timing? It's understanding what investing actually is. Most people think investing is complicated: charts, jargon, risk, stress. But at its core, it's much simpler than that. It's about small decisions made consistently that compound into something meaningful over time. In this video, we're breaking investing down from the ground up. No hype, no shortcuts. Just a clear explanation of how investing works, why it matters, and how anyone can start. Welcome to Mano Invest. What is investing, really? Imagine you've got one snack. You could eat it now and feel briefly triumphant, or you could use it to build a system that makes snacks appear forever. That second option is investing. Investing is the act of giving up a little comfort today in exchange for the possibility of much more comfort later. You place money into things you believe will grow in value over time, not instantly, not magically, but gradually, often quietly. At first, nothing seems to happen. Weeks pass, months pass. It feels boring, uneventful, suspiciously uneventful. Then one day you look back and realize the small, repeated decisions stacked into something meaningful. That's the core idea. So what can you invest in? Investing isn't one thing, it's a whole menu. You can invest in companies by buying pieces of them through stocks, loans through bonds, property like real estate, commodities like gold or oil, new technology and digital assets, small businesses, or broad collections like index funds and ETFs. Each option behaves differently. Some are calm and slow, some are chaotic and dramatic, some feel smart until they don't, which leads to a common question. Why not just save money? Saving feels safe. Your money doesn't move, it doesn't disappear, it just waits. But here's the problem. While your money is waiting, prices usually are. Over time, inflation quietly raises the cost of everything. Food, housing, energy. That means the same amount of money slowly buys less than it used to. So money that's only saved often loses purchasing power, even if the number in your account never goes down. Investing, on the other hand, gives your money a job. Ideally, it grows faster than inflation, meaning your future self isn't quietly robbed by time. Savings are for stability. Investing is for growth. Most people need both. Active versus passive investing. Once you decide to invest, you hit a fork in the road. Active investing. This is hands-on, research-heavy, opinionated. You analyze companies, follow markets, read reports, track trends, and try to outsmart everyone else. Sometimes it works. Sometimes it turns into stress with spreadsheets. Passive investing. This approach accepts a simple truth. Predicting the market consistently is very hard. Instead of picking winners, you invest regularly into broad funds that track the overall market. You buy whether things are up, down, or sideways. This is often called dollar-cost averaging. It's less exciting. It's also historically very effective. Neither approach is perfect. Both involve risk, which brings us to the unavoidable part. Risk versus reward. Every investment carries risk. There is no exception. Some investments swing wildly but offer high potential returns. Others move slowly but feel more stable. Generally, the higher the possible reward, the higher the uncertainty. Understanding your own risk tolerance matters more than chasing the highest number on a chart, because the best investment is the one you can stick with without panicking at the worst possible moment. A simple way to think about popular investments. Number 1, precious metals. Often hold value over time and can protect against inflation, but they don't generate income. Number 2, real estate. Can provide cash flow and appreciation, but comes with maintenance, debt, and market risk. Number 3, cryptocurrency. Highly volatile, still evolving, potentially transformative, but not for the faint of heart. Number 4, individual stocks. High upside if you're right, painful downside if you're wrong. Number 5, index funds and ETFs. Broad, diversified, historically consistent. Not flashy, but effective over long periods. No single option is perfect. Diversification exists for a reason. Index funds and ETFs, explained simply. Instead of betting on one company, index funds let you invest in many at once. An index fund tracks a group of companies, often representing a large portion of the market. Your money is spread across all of them, so no single failure can destroy your investment. ETFs are similar, but they trade throughout the day like stocks, while index funds typically settle once per day. The key idea is diversification. You're not trying to be right about one thing. You're betting that over time, progress continues. Starting with little money. You don't need a lot to start investing. You need consistency. Start with what you can afford without harming your ability to live. Automate it if possible. Increase it later if it feels comfortable. Apps and platforms make this easier than ever. The hardest part isn't starting, it's staying patient, because the real payoff usually comes decades later, not months. Common beginner mistakes. Avoid these traps. Number 1, investing money you'll need soon. Number 2, expecting fast results. Number 3, jumping in and out based on fear. Number 4, chasing hype. Number 5, abandoning a plan during downturns. The market rewards patience far more often than brilliance. Finally, investing isn't about getting rich quickly. It's about building systems that reward time. Small actions, repeated calmly, can outgrow dramatic decisions fueled by emotion. Plant early, water consistently, let time do the heavy lifting. And remember, the future version of you is watching. If this video helped you understand investing more clearly, make sure to hit the like button. It really helps the channel reach more people who are trying to learn this stuff for the first time. And if you want more simple, practical videos about investing and personal finance, subscribe to Mano Invest so you don't miss what's next. Thanks for watching, and I'll see you in the next one.